Hello and welcome to Stock Market Fever. Today is Saturday, May 21st, and in this video we will analyze and evaluate Tesla to understand its meteoric rise to dizzying heights, its crash and burn back down to earth, and its future prospects in the near future and years to come. Tesla makes and sells high-performance, completely electric automobiles and components, as well as solar, storage, and grid services, among other renewable energy goods, and it was the first company to commercialize an electric car that was federally compliant and had a highly impressive leading range on a single charge. North America, Europe, and Asia, Tesla sells and services its vehicles through its own sales and service network. And because its stores don't have vast stocks, many customers opt to personalize their automobiles. Tesla's revenue has been on a tear in recent years, soaring from $24.6 billion in 2019 to $31.5 billion in 2020 and $47.2 billion in 2021, soaring due to higher vehicle sales. And with that exponential sales growth came astounding profit growth. From the second quarter of 2019, when Tesla reported a quarterly loss of 46 cents a share, Tesla started showing modest profits leading to the 20 cents range through 2020. But then all hell broke loose, and from the first quarter of 2021 through the recently reported first quarter of this year, earnings per share skyrocketed from 39 cents to 286, with analysts predicting continued exponential growth from its upcoming releases of its Cybertruck lines, which even includes an electric semi-heavy-duty truck and already has over 1 million pre-orders. With its electrifying drive into profitability, Tesla's financial balance sheet also went into overdrive. At the end of the first quarter, Tesla reported having over $66 billion in assets and under $31 billion in liabilities. Very impressive indeed. And with Tesla's rising fortunes and seemingly unstoppable continued growth as a result of a massive societal shift towards electric vehicles, came hypersonic share price growth. If you had purchased Tesla shares 5 years ago, you would be up over $600 per share, for almost a 1,000% ROI based on Friday's closing price of just under $664. Even if you bought Tesla stock just 3 years ago, you'd be up about the same, over $625 per share. And even if you bought Tesla stock 1 year ago, you'd still be up about $100 per share. But if you purchased Tesla stock this year at the beginning of 2022, you would be down from $1,208, its high for this year, all the way to Friday's close of $663 for a loss of $545 per share. So, what went wrong? Why did Tesla go all the way down from April's high of $1,153 all the way down to $663 in less than 2 months? Tesla, it is true, did go down at the beginning of the year, sinking from $1,208 down to just above $800 by the end of January, and hovering in that territory through March, but then Tesla soared up to over $1,100, defying the rest of the market's downward march. But last month in April, stocks fell as investors assessed risk concerns such as high inflation, interest rate hikes, and the Russian-Ukraine conflict. And after it was revealed that Musk's $44 billion buyout proposal for Twitter would be accepted, Tesla shares plummeted towards the end of the month. Tesla shareholders objected to Musk's acquisition of Twitter. Investors were afraid that the EV company's CEO would sell a big amount of stock to obtain financing for the purchase. And it was disclosed in a filing on April 29th that he had sold nearly $4 billion worth of stock. Tesla shareholders were afraid that, in addition to a significant block of shares being sold in a short period of time, Musk would be distracted by Twitter. With the electric vehicle firm and SpaceX already under his command, some investors are concerned that operating the social media company may exhaust the CEO's focus. And yes, it is true that the electric vehicle leader is reporting strong margins and growing sales at a considerably quicker rate than its established auto industry rivals. But whether the firm can live up to and even exceed its highly growth-dependent valuation over the long run is a fiercely debated topic among investors. It's evident that Tesla is distinct from other car firms with its category-leading position in the EV area and the opportunity to develop other high-margin categories like battery technology and self-driving software. However, because the market has always been very competitive, the business will need to keep generating innovative victories to justify such a high valuation. And it could also be argued that investor sentiment was simply too hyped up to ever justify the extraordinarily high value being placed on Tesla shares. And as other stalwart tech names fell lower in an overall dismal market, perhaps Tesla investors too looked down from their lofty share heights and even loftier share growth projections and figured it was time to seek safer, lower grounds. And where do securities industry analysts see Tesla heading? Well, Cathie Wood, leader of ARK Innovation, forecast just this past April that Tesla would be trading at 4,600 by 2026. Well, that didn't age well, did it? But then again, 2026 is 4 years from now, and the world could be topsy-turvy by then, right? So, who knows? Maybe Cathie is right. But on the other side of reason, we have analysts at Citigroup and JP Morgan maintaining their sell and underweight ratings, but feverishly raising their target prices to $375 and $395 respectively. But reflecting an optimistic but more conservative opinion, CFRA analyst Garrett Nelson rates Tesla a 5-star strong buy, forecasting a target of $1,350 when the stock was trading at $865. Okay, the price went down since then, but what share prices haven't plummeted this year, other than oil stocks for the most part? And where does stock market fever stand? It is always challenging to predict exactly where any stock will be in a year, now even more so than in most years. With so much uncertainty around rising interest rates, still out of control inflation driven by rising oil prices, labor costs, supply chain disruptions, the war in Ukraine, and a looming recession, we remain cautious about the overall market. We believe the market could very well continue to test and break through new bottoms in the foreseeable future, and that would sweep Tesla along for the ride. But this does not mean we won't take a stand. And while we do not offer investment advice, we do offer our opinion. Before we offer our opinion, may we politely request that if you like our video and would like to see more like this, to please give us a like and subscribe. Thank you very much. Okay, here it is. In our opinion, Tesla is in the right place at the right time, and we are bullish on its upcoming fortunes. We believe the risk of rising runaway oil prices combined with government edicts to move to non-gasoline engines will only heighten the demand for Tesla's products. We believe that Tesla sales will continue to grow exponentially as new production facilities come online, and as their innovations keep them at the forefront of electric vehicle performance. While we believe that the self-driving car concept will be more difficult to achieve, Tesla should nevertheless continue to grow and thrive in sales and profits. And while it is possible for Tesla to dive a bit further and test new lows, in sync with the overall market, we believe that over time, that there will be continued exponential growth in sales and profits. Thus, we believe that within a year, Tesla could easily be trading again at the $1,000 per share range, and are bullish on Tesla's future and share trajectory. But what do you think? Where do you think Tesla is headed, and why? What price do you believe Tesla will be trading at in the coming months and year ahead? Please leave your thoughts and comments below, as we love hearing from you. And please be sure to like and subscribe to Stock Market Fever to get future actionable news and alerts.